Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the 3 best high-growth semiconductor stocks for 2024. Before we start, stick around until the end of the video where we'll reveal a bonus tip on how to spot the next big semiconductor stock before it skyrockets. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Finding the right tech stock to fuel your portfolio's growth can turn a small investment into a major return. Tech firms have been notorious for giving investors significant returns in exchange for high risk. However, it doesn't always have to be that way. Investors can look into the backbone of tech companies and invest in high-growth semiconductor stocks instead. This avenue allows them to capitalize on tech's growth and participate in the increased demand from various sectors like healthcare, automotive, electronics manufacturing, and more. While there are no real guarantees in life, finding a semiconductor leader with growing revenues and earnings may one day turn out to be the next tech superstar. So, let's look at high-growth semiconductor stocks that have the potential to generate massive returns for your portfolio. First on our list is ACM Research, ticker ACMR. ACM Research is a wafer cleaning equipment manufacturer that specializes in single and batch wet cleaning, packaging, and other semiconductor manufacturing processes. The company uses SAPS technology to run 2 wet wafer cleaning equipment, Ultra C SAPS V and Ultra C SAPS II. Additionally, it designed the timely TEBO technology, which is applied during the 2D and 3D wafer fabrication processes. The company's latest offering now includes an advanced frame wafer cleaning tool used in advanced packaging that provides an almost 100% recovery of the solvents used in the process, therefore reducing costs. ACM Research ended 2023 strong, with revenue growing 43% and basic EPS increasing from 21 cents in 2022 to 47 cents. President and Chief Executive Officer Dr. David Wang says, "We believe these results underscore the strength of ACM's multi-product portfolio and our growing customer base. We have captured market share, with our leading cleaning products witnessing 48% growth." This performance highlights ACM's status as one of today's most attractive high-growth semiconductor stocks. Analysts also rate ACMR stock, up 17% year-to-date, as a strong buy. ACM Research is poised to take advantage of the growing demand for semiconductor equipment, making it a compelling investment opportunity for those looking to tap into the tech sector's backbone. One of the most intriguing aspects of ACM Research is its innovative approach to wafer cleaning, which is a crucial step in semiconductor manufacturing. By reducing costs and improving efficiency, ACMR is setting a new standard in the industry. The company's commitment to continuous innovation is also evident in its significant investment in research and development. ACMR is constantly working to improve its existing technologies and develop new solutions to meet the ever-evolving needs of the semiconductor industry. This dedication to innovation positions ACMR as a leader in the field, making it an attractive choice for investors seeking high-growth opportunities. But before we proceed, here's a quick question for you. What's the name of the major index that tracks the performance of the 500 largest companies listed on stock exchanges in the United States? Think you know the answer? Let's move on and find out. Next up, we have ACLS Technologies, ticker ACLS. ACLS Technologies is a leader in ion implementation in the semiconductor sector and plays a key role in the semiconductor chip fabrication process. The company provides technology that runs implantation, cleaning, and dry strip processes, which are critical steps in the integrated circuit IC manufacturing process. Its latest Purion XES IC Power Series implanter is a certified hit and a strong growth driver for the company. ACLS Technologies reported record numbers in FY 2023, with revenue reaching $1.13 billion, up from $920 million the previous year, registering a 23% growth. That is currently its highest year-over-year growth. Operating profits also grew 25%, while net income increased by 35%. President and CEO Russell Lowe was quite happy with the results, as the growth was achieved despite an industry downturn. Lowe said, "We have developed a large and diverse customer base in the power market," adding, "and we continue to win business from new customers as well as expand our product footprint with existing customers." The company's first quarter of 2024 results affirm this optimism, as its $242.4 million revenue and $1.57 diluted EPS exceeded forecasts of $242 million and $1.22 per diluted share, respectively. If this continues, the company is well on its way to the top of the list of high-growth semiconductor stocks. ACLS stock also has a strong buy rating from analysts and is up 11% year-to-date. ACLS Technologies is clearly making waves in the semiconductor industry, and its strong financial performance positions it as a top contender for investors seeking high-growth opportunities. ACLS Technologies' focus on ion implantation technology is particularly noteworthy. This technology is essential for the manufacture of semiconductor devices, and the company's advancements in this area have solidified its position as a market leader. The Purion XE-SiC Power Series implanter, for instance, addresses the growing demand for power devices, which are critical for applications in electric vehicles, renewable energy, and other emerging technologies. Additionally, ACLS has been making significant strides in developing energy-efficient solutions, which is becoming increasingly important in today's environmentally conscious market. The company's commitment to sustainability is another factor that sets it apart. ACLS is actively working to reduce its environmental impact by developing energy-efficient products and implementing sustainable practices throughout its operations. This focus on sustainability not only benefits the environment, but also makes the company more attractive to socially responsible investors. Lastly, we have KLA Corporation, ticker KLAC. KLA Corporation is an industry leader in yield management systems and process controls. The company specializes in various products that help companies innovate through its inspection, metrology, and related services. KLA operates in three main segments: semiconductor process control, display and component inspection, and specialty semiconductor process and PCB. In partnership with IMEC Automotive, KLA aims to establish the Semiconductor Talent and Automotive Research, or STAR initiative. This partnership will focus on fostering talent that can advance semiconductor applications in the automotive industry. KLA's fiscal year 2023 results boast a 14% year-over-year increase in revenue, from $9.2 billion to $10.5 billion. Meanwhile, net income per diluted share grew slightly, from $21.92 to $24.15, representing a 10% growth rate. The company is also committed to focusing on customer requirements and essential R&D investments in light of these results. Its stock is up 45% year-to-date, and analysts rate the stock as a strong buy, making it one of the best high-growth semiconductor stocks in the market. KLA's commitment to innovation and its strong financial performance make it a standout in the semiconductor sector, offering investors a solid option for portfolio growth. KLA Corporation's role in yield management and process control is crucial for ensuring the quality and reliability of semiconductor devices. Their advanced inspection and metrology tools help semiconductor manufacturers maintain high standards and reduce defects, which is vital for the industry's continued growth. The company's focus on research and development, as well as its partnerships with other industry leaders, positions it well for future success. Additionally, KLA's involvement in the STAR initiative highlights its forward-thinking approach and dedication to cultivating the next generation of semiconductor experts. Furthermore, KLA's global presence and diversified customer base provide it with a strong competitive advantage. The company serves customers in various regions, including Asia, Europe, and North America, which helps mitigate risks associated with regional economic fluctuations. This diversification, combined with its robust portfolio of products and services, positions KLA for long-term success and growth. Before we wrap up, let's dive into this table summarizing the key metrics of our top 3 high-growth semiconductor stocks. ACM Research, with a ticker ACMR, is trading at $23.27 with a market cap of $1 billion. It shows a strong revenue growth of 43% and maintains a gross margin of 49.61%. Their earnings per share stand at $1.31, reflecting their robust financial health. ACLS Technologies, ticker ACLS, is priced at $144.72 with a market cap of $5 billion. This company has seen a 23% revenue growth and boasts a gross margin of 44.58%. Notably, its earnings per share are an impressive $7.56, underlining its profitability. Lastly, KLA Corporation, ticker KLAC, is trading at $831.62 with a substantial market cap of $111 billion. It has achieved a 14% revenue growth and a leading gross margin of 60.72%. Their earnings per share are an outstanding $19.08, showcasing their strong financial performance. These figures not only highlight the financial strengths of these companies, but also reinforce why they are considered top picks for investors looking to capitalize on the booming semiconductor industry. In summary, investing in high-growth semiconductor stocks like ACM Research, ACLS Technologies, and KLA Corporation can provide significant returns for those looking to capitalize on the tech sector's backbone. Each of these companies has demonstrated strong financial performance, innovative product offerings, and growth potential, making them excellent choices for investors seeking to boost their portfolios. And now for the bonus tip. One way to spot the next big semiconductor stock is to keep an eye on emerging technologies and companies that are investing heavily in research and development. Look for companies that are consistently improving their technology and expanding their market reach. These are often the ones that will lead the next wave of innovation and provide significant returns. Also, consider companies that are diversifying their product lines to cater to multiple industries. This diversification can provide a buffer against market volatility and increase the company's overall stability and growth prospects. But before you go, one last question for you. What's one common mistake that beginner investors make when diving into the stock market? Leave your answers in the comments below. Thank you for watching Simple Investing Secrets. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more valuable content. And remember, this video is for informational purposes only and is not financial advice. See you in the next video.